implore you to please take action and reach out to us at 855-DON-GINO, 855-DON-GINO. It's that you give us a call. It calls both of us. It's actually a live cell phone to Don Getling and Gino Franti. This is a live show, believe it or not.
Yeah, and Don Getling will tell you it's a live cell phone call to him. He says I never answer it.
That's right. Anyways, that's because Gino's busy working on the back end of all our refinances and purchase files, saving people's dream of homeownership. In fact, we just did one recently. We have to tell you because our experience of 34 years makes a huge difference of working with sometimes with a big institution that has somebody that hasn't been in the industry for 20-something years or has the resources to save the loan. And we just fixed a loan. Gino, actually,
yeah, I had my bucket and my glue, and we just fixed a loan for someone who was working with another lender for 45 days, couldn't get the deal done, discovered something that we would have discovered in the first 10 days of doing a loan, not 45, and unfortunately it was going to kill their deal. And luckily we had a local professional reach out to us and said, I think you may be able to fix this. Please take a look at it. And it's a win, and it's a good one on our chalkboard because we closed it in 18 business days, fixed all the problems. Not only the problem that they had discovered, but another problem that they were going to discover. Yeah. So we fixed a lot of things and helped someone actually with an investment property. So they're able to have a little more return on their investment this year, and they were able to achieve that because we were able to bail them out.
So the moral of the story, if you have any questions or concerns regarding either an escrow you're already in, a refinance you're thinking about doing, or a purchase you're thinking about doing, strategy means everything. We're going to talk about strategies with our guest today, Bill Friedman, tax extraordinaire specialist, because strategies mean everything. It can change your life, and we do this every single day with our clients at Cherry Creek Mortgage, and we want to reach out to you. So please email us at donandgino@gmail.com, donandgino@gmail.com, or go to our website, donandgino at
donandgino.com.
That easy.
No Gmail, donandgino.com.
Yes.
But, I was thinking about how just before we left, you talked about the seasonal tax preparer.
Yes.
And, it reminds me of 2006, 2007, when you had the fly-by-night mortgage professional that just came into the industry for a little bit because it was easy. So
the butcher that was chopping up your meat and then they see you in the back room and did your refinance for you?
Yeah, pretty much. And, at the end of the day, maybe I'm a little naive, but I like to think that those weren't all bad people, but they just didn't have the education, and they put people in the wrong products. And that's why you shouldn't work with someone who's not seasoned, like you mentioned, 34 years experience here, 27 years experience with Bill, is don't work with someone that's handling the largest aspects of your life, your home and taxation. These are massive, massive things that are going to affect where you're going to end up down the road. So I'd say always work with someone who's a professional in their field, well-respected, local if possible, and accountable to you.
Well, and they're accountable to us, and they're accountable to the professional resource group, because this group holds each other very accountable and refers each other's clients. So it's basically a extension of trust to all our professionals. So now, Bill, we need to bring you into this, because we were teasing everybody right before the break about what is the rich. What is the difference in income brackets and all that nowadays?
And it's really confusing because there's so many different changes taking effect as of January 1st, 2013. Originally, we had the Obamacare tax, which became very popular during the debates. And this does go into effect starting January 1st, 2013. And rich was determined to be $200,000 if you're individual and $250,000 if you're married filing jointly. And there's two new tax rate increases associated with this. If you earn higher than those levels, any net investment income above those levels will be taxed at an additional 3.8% tax. Meaning if you have dividends or capital gains, you're going to get an additional 3.8 tax hit on top of the tax rates that you normally pay if you make over $250,000.
And that's the Obama Medicare
tax.
So I don't know how.
Tax. Earned income on wages alone, you're going to pay just under 1%, but it's a 0.9% increase on earned income as well.
Well, what I want to clarify about that, because there's been some misconceptions on that particular tax, that if you sell your home, you're going to have to pay a 3.8 tax on the sale of your home or the sale price of your home. What I just understood, that it's only on the capital gains above your exemptions that are going to be taxed at that rate. Is that correct?
That's correct. You still have the qualified capital gains exclusion on your primary residence. It's still $500,000 if you've lived in your home 2 of the last 5 years. You still get a $500,000 exclusion. So your gain has to be larger than $500,000 before you even pay any tax, and that's the amount that will be taxed at the higher capital gains rate plus the 3.8% net investment income.
So actually, you just said something that was critical, because I love that we can get tidbits of information from Bill Friedman. I was listening and thinking about this at the same time.
Oh, I have a new good for the
no, I have a new
investment.
Well, I got a new investment strategy now. You can move up from your current home into a new home right now, not have to sell your home at the bottom of the market, hold it, buy another property, and 2 years from now, you'll actually have 2 homes that are qualified for the exemption.
You could sell one. You can move. You can have your primary residence, move out of it, keep the old home for 2 years, as long as you sell it before the 3rd year's up, because you have to live in it 2 of the last 5 years.
Okay.
If you sell it before you're out of that home for 3 years, you qualify for the $500,000 exclusion. From that point, you have 2 more years to go before you can qualify on the new home for the new exclusion.
Okay,
Right.
so
Yeah, I hope you heard that. It's Bill Friedman with Friedman, Thompson and Associates, CPA extraordinaire right here in Valencia. And he's sharing with us tidbits. I guarantee you, I know my parents at one time didn't know this exclusion too, because they have a few properties and they wanted to move from one property, but they're worried about losing their tax advantages.
well, I mean, I'm thinking about a possibility of having hundreds of thousands of dollars in possible capital gains tax exempted just by moving appropriately, moving at the right time and timing that properly. I mean, that's huge.
If you're a skilled contractor, you can actually move into a home, build the home yourself, add on to the home, increase the value, sell it for $500,000. Every 2 years, exclude that $500,000. It's free earned income.
Dad, are you listening?
Yeah, Gino's dad's a contractor. And now he's texting on his phone. We got to build houses.
Well, those are the kinds of things you can only get from a professional. That's why you have to
100%.
work with someone like Bill, because you're not going to get that kind of stuff from H&R Block. I just guarantee you. Oh, I said it, didn't I?
Oh, you did. H&R who?
Well, that's okay. They're not.
It's like when we say when people call Green Who,
Yeah.
trying to get their mortgage advice.
or cash fall.
Yeah, cash fall. That's funny. Because seriously, try calling any of these people up and try to get the same person each time. How accountable do they have to be if you can't even get the same person on the phone that's supposedly helping with the biggest asset or debt of your life? Are you kidding me?
Well, and they're not trained. Forget about the fact that you can't get the same person. You're just not getting a skilled, trained professional. That's the big
Why would
deal.
you do that? Okay, and then you think you're saving money. Here's the key, and Bill, this is a pet peeve of mine, because I did the homework. Just so you know, Bill, you'll get a kick out of this. When I first worked with a professional CPA, big difference. I was paying the typical, I won't even say the dollar amount, wasn't a lot, so I thought I was getting a smoking deal. So I went and paid for that and paid a professional, because I wanted to know the difference. I was willing to pay the difference. The professional saved me so much money. It was the net gain was literally for me as a business owner was $10,000 net gain, because I went to a professional, and it wasn't like he cheated on my tax. He's just like, what is this guy thinking? You have all these tax deductions that you are not utilizing.
That's my goal. My goal is to actually save my clients more in taxes, and they're going to have to pay me to prepare the taxes.
That's it. More net gain, and don't pay $1 more than you have to. That's the key. I love that. We're going to put that as a little tagline. We're going to get you a shirt that says that. Don't pay more than $1 more than you have to.
I like that. And you gain a friend, because Bill's a good guy. I mean, we love Bill. We love hanging with Bill. He's a real person. You will gain a friend. Who doesn't want a friend as a CPA? That's a good thing to have. And Bill cares about his clients. He's very respectful of his clients and works on. We love referring our clients your direction.
Thank you. Thank you.
I know you care about them so much, because you're like, I have to do my job as well as possible, and that's what, because you're even concerned with how much business you take in at a time to make sure you give them the level of service they want.
You don't want to take in too much, because you want to be able to provide the right amount of service to the clients you already have.
But we're helping you reach out to more, and that's our goal. Every week, they reach out to more people and help them guide them to personal financial wellness.
That's correct.
And you're a part of our.
Can I clarify a little bit more
Yes.
on the new tax rates that are going up? We talked about the Obamacare tax, which is going into effect January 1, but in addition, in this new law, the American Taxpayer Relief Act of 2012, which got signed into law on January 2nd, it increased the tax rates on the rich. It went from a 35% highest tax bracket to 39.6, but they increased the level of what was rich, and now that level is $400,000 for an individual, $450,000 for married couples. So you're going to pay a higher tax rate on income at 39.6 when you get over 450,000 for a married couple, but you're still going to pay those other taxes at over 250,000 for a married couple, the net investment income and the earned income taxes on the Obamacare tax.
All right, we're going to. I like that topic. I want to clarify a little bit more because everything you just automatically pay the higher tax on your whole amount. So we're going to clarify, what do you really pay in your taxes? What does it matter based on what tax bracket you're in, and how to make sure you stay in the best tax bracket possible with real professional help from Bill Friedman and Friedman, Thompson and Associates right here on the Don and Gino Real Estate and Finance Show.